What? Msafi. Msafi auditor. Msafi auditor. Msafi auditor. This is very clear from these are threats that can affect their independence. So Msafi is an acronym that we use to identify this particular threats. Like number one, number 2, what we call the management threats. The management threats. The management threats. So these are the threats that arises when the auditors gets involved in decision-making process, which is purely the management responsibility. Then later they've been asked to express an opinion of the outcome of that particular decision. Already the vote has been conflicted, and they may not be able to give an objective opinion. The S to Konazo are S, the two of them. One, we can check what about the self-interest. The self-interest threats. So here happens when our auditor will be pursuing their own personal interests at the expense of the auditor and client. Like for example, for instance, some financial relationship between the auditor and the client. Auditor owns a certain percentage of the share capital in the client entity. Like for example, more than 5% of the share capital in the client entity. For that case, this auditor is likely to pursue their self-interest at the expense of the overall audit. How may we come up with an overdue audit fees? There is a self-interest threat that can also affect auditors' independence. If maybe the auditor is a contractor or a supplier to the client, there is a self-interest matter there that can also affect auditors' independence. The number 3, we have what we call the self-review. The self-review threats, the self-review threats. So this one arises whereby just an auditor provides also the multiple services to the client, the non-audit services to the client. For example, the preparation of the books of accounts, the compilation of the tax returns for the client. Then later again, they come to express an opinion, so kind of work. The number 4, we have what we call the A for the advocacy threats. Advocacy threats, advocacy threats. So this type of a threat which arises where auditors tend to pursue, tend to champion or promote the interest of the client. So like if I the client has a court process, then the auditor appear there as their expert witness. The next we have familiarity. Familiarity is due to what we call the close social proximity. There's a family member there, a relative or a friend happens to be sitting at a key position of influence. Really, that point auditor can easily be his objective can easily be impaired. Then the last one we have what we call intimidation threats. Intimidation threats. Sometimes it arises out of the pressure that client management could be putting on the auditor. For example, they could be asking the auditor to give a favorable opinion, which should not be the case, or threatening the auditor to terminate their contract in case they do not agree on certain matters. So let's begin by looking at these particular threats. You can draw these, but before that one, okay, to report Banika subtopic as what threats. Or before that one, just write that there are numerous conditions. There are numerous conditions. There are numerous conditions that may impair, the professional accountant ability, the professional accountant ability to comply with the fundamental principles, including independence. These threats are categorized into the following 5 categories. the following 5 categories. The following 5 categories. Number 1, familiarity threats. Number 1, familiarity threats. Number 1, familiarity threats. Familiarity threats. Familiarity threats. These arise when the auditor. These arise when the auditor. These arise when the auditor. These arise when the auditor has a close relationship. Has a close relationship. Has a close relationship with the audit client. With the auditor client. With the auditor client. The auditor in such circumstances, the auditor in such circumstances, the auditor in such circumstances may tend to be sympathetic, may tend to be sympathetic, may tend to be sympathetic to the client, and may fail to exercise, and may fail to exercise, and may fail to exercise the expected level of professional skepticism, of professional skepticism, of professional skepticism, of professional skepticism. Number 2, self-interest threats. Self-interest threats. Self-interest threats. Self-interest threats. These arise when the auditor has financial interest, in the client company, has financial interest in the client company, has financial interest in the client company. This will compromise the auditor's integrity. This will compromise the auditor's integrity. This will compromise the auditor's integrity. This will compromise the auditor's integrity, objectivity, and professional skepticism, and professional skepticism, and professional skepticism, and professional skepticism, and professional skepticism. Then go to number 3, self-review threats. Self-review threats. Self-review threats. Self-review threats. Self-review threats. Number 3, self-review threats. These threats arise when the auditor. These threats arise when the auditor. These threats arise when the auditor. These threats arise when the auditor appears to be reviewing his own work. 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 In this case, the auditor. In this case, the auditor. In this case, the auditor. In this case, the auditor may not see any mistake. May not see any mistake. May not see any mistake. May not see any mistake in the work they did. 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 Or may be unwilling to disclose the mistakes.
or they may be unwilling to disclose the mistakes, or they may be willing to, so they may be unwilling to disclose the mistakes in the work they did. Unwilling to disclose the mistakes in the work they did. In the work they did. I go to number 4, advocacy threats. Advocacy threats. Advocacy threats. Advocacy threats. These threats arise when the auditor. These threats arise when the auditor. These threats arise when the auditor. These threats arise when the auditor is promoting the interest. Is promoting the interest. Is promoting the interest of the audit client. Of the audit client. Of the audit client. In other ways, in addition to being their auditor, in addition to being their auditor, in addition to being their auditor, in addition to being their auditor. Then 5, intimidation threats, intimidation threats, intimidation threats, intimidation threats, intimidation threats, intimidation threats. These threats arises where the professional accountant. This threat arises where the professional accountant will be working under pressure, or undue influence, by the client management, or an undue influence by the client management. E.g., threatened with the litigation, e.g., threatened with the litigation, threatened with the litigation, threatened with the litigation, termination of their contract, termination of their contract, termination of their contract, etc. Let me go to management threats. Management threats. The number 6, management threats. Management threats. Management threats. Management threats. Management threats. This threat occurs. This threat occurs. These threats occurs where the auditor gets involved. Where the auditors gets involved, where the auditors gets involved in the decision-making process, in the decision-making process, in the decision-making process, which is purely the management responsibility, which is purely the management responsibility, which is purely the management responsibility. This may impair the auditor's independence. This may impair the auditor's independence. This may impair the auditor's independence. So those are the threats. Let's go to the safeguards. Safeguard to auditors' independence threats. Safeguard to auditors' independency threats, safeguards to auditors' independency threats, safeguard to auditors' independency threats, safeguard to auditors' independency threats, safeguard to auditors' independency threats. So we need to know what are safeguards. So you read that safeguards are measures are put in place. Safeguards are measures are put in place. Safeguards are measures put in place to eliminate or reduce, to eliminate or reduce, to eliminate or reduce the auditor's independency threats. The auditor's independency threats to an acceptable level, to an acceptable level, to an acceptable level, to an acceptable level. Maybe you can put this upward down.
We can't see it, Mwalimu. We can't see it well. Excuse me, Mwalimu.
Oh, yes.
That one is reduce the threats to. The other part is
Acceptable
not visible.
acceptable level. Use the
Okay,
threats
thank you.
to acceptable level.
Thank you.
I now have examples of the safeguards, just a few of them. Examples of safeguards. Examples of safeguards. So what are some of the safeguards auditors need to follow? So one is performing the audit by following. Performing the audit by following. The laid down is as performing the audit by following the laid down is as performing the audit by following the laid down is as are the international standards on auditing. So they should be guided by those are important standards, the international standards on auditing. Number two, following the quality control procedures. 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 Next, ensuring that the staffs are adequately trained. Ensuring that the staffs are adequately trained. Ensuring that the staffs are adequately trained in understanding the importance of ethics. Ensuring that the staffs are adequately trained in understanding the importance of ethics. Next point, consider disengaging. Consider disengaging. Consider disengaging from the appointments where there is a conflict of interest matters. Consider disengaging from appointments where there is conflict of interest matters. Consider disengaging from appointments where there is a conflict of interest matters. Next, seeking legal and professional advice. Seeking legal and professional advice where appropriate. Seeking legal and professional advice where appropriate. Seeking legal and professional advice where appropriate. Is where appropriate. The other one, having audit rotation policy. Having audit rotation policy. Having audit rotation policy. Where the auditor offers multiple services to the client. Having an audit rotation policy where auditor offers multiple services to the client. Where auditor offers multiple services to the client. Where auditor offers multiple services to the client. Next, enforcing disciplinary measures to promote compliance. Enforcing disciplinary measures to promote compliance. Enforcing disciplinary measures to enforce compliance. So that's what you need to know on as far as threats are concerned and the various safeguards that needs to be put in place. So it's very important for us to be able to identify the matters that can lead to auditors' independence to be impaired under those particular threats matters. Like they're on the self-interest, much of them is on the financial interest with the client. Inaweza kuwa maybe auditor and our own shares in the client entity. Inaweza kuwa maybe is a fee dependency, over dependency on an audit fee from one audit client. Inaweza kuwa social whereby the auditor gets some gifts or receives some hospitality from the client. Inaweza kuwa ni loans, inaweza kuwa ni business and personal relationship. Very important for us to be able to know those matters that can lead to the threats on those areas. So check this question here, December 2021. The sitting for December 2021. December 2021. December 2021, there is a question there. December 2021. December 2021. So this question reads like this: explore the potential threats to an auditor's independence. Explore the potential threats to an auditor's independence. So just need to identify something, to list each one of them, then explain. That question was only 4 marks. We just identify, maybe briefly explain what is meant by those particular threats. Just identify, briefly explain.
Which is the question, Mwalimu? December 2021 question.
December 2021, question number 1. Question number 1B. Question number 1B. Question number 1B. So Mohammed, I request to go for prayers. Okay, so let's have some 5 minutes break to allow Mohammed go for prayers.
Na pale najua sasa mimi kwa basi kama yeah. So now wakati nilienda nikaambiwa hapa kufanya nilikuwa nimefanya mwaka 5 sasa kufanya 6 ngata mtego ikache sila basi sasa 5 ni kwanza ili change sasa pale na mtaka hiyo ya farini alafu 6 kufanya hapo tunaenda shule ndio sasa ni nini kwa hapo nini inamaanisha nini 2 3 So hiyo ndio interpretation yangu because you are online taonekana bila sisi lakini ya Mungu fanya kitu ulifanyia watu Huwezi kuweka hapo nili zake pia subscribe. So manifesting. Publishers, CPA. Eso que dijo cualquiera nada.
Mohamed amerudi. Mohamed, you're back. Not yet. Okay, sir. So next I want us to look at, after discussing issues to do with the auditor's independency, let's now move on to kitu inaitwa money laundering. Money laundering, a subtopic, money laundering. Money laundering is part of ethical issue concerned. Money laundering, money laundering, money laundering. So at the point of you being appointed as the auditor, one of the factors that you have to consider before accepting the appointment is the money laundering. You should be able to do a proper due diligence and investigation and find out if there is any suspicious activities of the money laundering with the client. Now, money laundering is whereby illegal money, that money that has been earned from the dirty sources, is brought back to the system to appear like money that has come from legitimate sources. These illegal sources are called drug trafficking, there's a called smuggling, there's a called poaching. So as a professional accountant, you should be able to apply your professional judgment to identify any situations or the possibility that the client could be engaging in any form of money laundering activities. Now, there are auditor procedures that you can perform when it comes to detection and prevention of this kind of a money laundering behavior. Now, clients, upon also maybe, sorry, not the client as such, these persons upon obtain this money from the dirty sources, there are three ways, among the three methods which they use to launder money nationally. You know them, the three ways on how they can launder money. Yes, social parties money from their corrupt places. So you want it to come and appear to be a good money. There are normally ways on how they can bring it back to the system. There are three possible ways of doing so. Samson, have you ever heard of money laundering? The wash? Yes, washing money, cleaning your dirty money to appear that yes, you have got good money. Kuna three ways on how that's money done. Because when you go to bank such kind of money, it may raise an alarm. You can be asked, where is the source? Then you fail to explain. So they normally try to break it down into small amounts. Then they can even give some individuals to go and deposit that sum to in their bank accounts or in different bank accounts. The other way, they can buy some property. There's acquired land, there's acquired some buildings or somewhere. So let's do the introduction part of the money laundering. We shall start by the definition. What does it mean? Money laundering. What does it mean? Money laundering. So money laundering is just the schemes of get rich quickly. get rich quickly. As an accountant, kuna things that can raise eyebrows. But there's a possibility of this client engaging money laundering. Let's say somebody kuna a hotel or a restaurant. The average services per person is maybe 2,000 shillings. In a particular day, the number of people that comes to that restaurant averagely maybe 10 of them. So sales in a day in a 20. Okay. By the end of the day, update the books to the accounts. Napata kwamba sales is 1 million. Upward is something very suspicious. There's an activity which is not adding up. Because ukiangalia even the flow of the clients, the customers coming in, there are very few of them. At the end of the day, this person is able to deposit huge sums of money as a sales proceeds. Where do we get such kind of a business? Is a money laundering. Ziko kila mahali. Inaweza kuwa ni hoteli, inaweza kuwa ni spa, inaweza kuwa any other business. Unapata kwamba they don't have clients, they are able to meet their obligations, they're paying rent, but bado they just continue. There must be possibility kwamba they're engaging in some form of money laundering. So let's define this term, money laundering. Money laundering is simply the cleaning of dirty money. Money laundering is simply the cleaning of dirty money. Money laundering is simply the cleaning of dirty money. Money laundering is simply the cleaning of dirty money. Full stop. It is where illegally obtained money. It is where illegally obtained money. It is where illegally obtained money. It is where illegally obtained money is given the appearance, is given the appearance, is given the appearance of having originated, from legitimate sources, from legitimate sources, from legitimate sources, from legitimate sources. Full stop. It is the process by which criminals, it is the process by which criminals, it is the process by which criminals attempt to conceal the true origin and ownership, the true origin and ownership of the proceeds, of criminal activities, of the proceeds of criminal activities, of the proceeds of criminal activities, allowing them to maintain control, allowing them to maintain control, allowing them to maintain control, allowing them to maintain control over the proceeds, over the proceeds, over the proceeds, and ultimately providing, a legitimate cover, a legitimate cover for their source of income, for their source of income, for their source of income. Such illegal activities include, include drug trafficking, corrupt politicians, corrupt politicians, illicit firearms trafficking, illicit firearms trafficking, illicit firearms trafficking, illicit firearm trafficking, smuggling, etc. Smuggling, etc. Let's go to the phases of money laundering. 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 Number one is placement phase. Placement phase. Placement phase. The placement phase. Placement phase. So these were now shepherding pesa from those illegal sources. It will be like maybe 100 million. So you can identify some persons, some individuals, person A, person B, person C, person D. Target this amount of money to the bank's account for maybe 2 weeks or for maybe 3 weeks. So we are now maybe 10 million, then maybe 20 million, like that, maybe 30 million, until you say we have to distribute the entire amount. So just a process now trying to break down that amount into smaller units for each deposit. So this is where the funds are deposited. This is where the funds are deposited. This is where the funds are deposited in a legitimate financial institution. In a legitimate financial institution. In a legitimate financial institution. E.g. breaking up the large amount of money, breaking up the large amount of money, breaking up the large amount of money into less conspicuous, smaller sums, into less conspicuous, smaller sums, into less conspicuous, smaller sums that are then deposited directly into the bank account. That are then deposited directly into a bank account. Or it may also entail, buying financial assets, or it may also entail buying financial assets. I'll go to number 2 first. Number two is layering phase. So layering phase, for this portrait, they're trying to conceive the origin of this particular money. They try to really show how there's no audit trail left when it comes to tracing of that illegal process. So what they do, they can transfer the money from bank A for the financial institution A, or B, or C, or D, until you figure maybe to where we take over the field is now said that money, it can be difficult to trace it. That kind of a process inaitwa the layering phase. Kama kuna sometime kulikuwa na scandal ilifanyika in US, it was involving some Kenyans. The deal, it was between HP company and after some schools, public schools. So HP going to supply some computers to that particular school. So these people went and created some fictitious accounts that trade receivables. Then they started now with money payment from those entities. Wakapata a lot of money. Hiyo pesa wakatoka na track wakitrace wakapata movement zake. Ilitoka from the United States, ikaenda somewhere in Australia. Kutoka Australia ikakuja wapi? So they're very clever people. They try to transfer. They do so many series of the bank transfer to make the money difficult to be traceable. So this is where the funds are transferred. This is where the funds are transferred from various financial institutions, in order to make the initial source untraceable. In order to make the initial source untraceable. In order to make the initial source untraceable. This makes difficult for the enforcement agencies. This makes difficult for the law enforcement agencies. To trail the illegal proceeds. And then you go to number 3, integration phase. Number 3, integration phase. This is where the funds are legitimated. Through deposits into a legitimate business enterprise. So those are the 3 phases or the stages of the money laundering, or the process of the money laundering. So let's go to auditor's responsibility for money laundering. Subtopic: auditor's responsibilities for money laundering. 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 So money laundering is a fraud. It is also some form of, you can say maybe irregularities, which is a serious economic crime. Now it does have no primary responsibility. You have no sole responsibility when it comes to the detection and prevention of errors and fraud. However, the standards require auditors to be able to apply what you call professional skepticism, to be in a doubt, to develop a questioning mind, to investigate such instances that they could be suspecting the client is engaging in any form of the money laundering. So there are certain audit procedures that auditors may apply whenever they suspect the client is engaged in money laundering activities. So write the following: that auditors are not required. Auditors are not required. Auditors are not required. Auditors are not required to design the audit procedures. To design the audit procedures. To design the auditor procedures with the aim of detecting. With the aim of detecting illegal activities. With the aim of detecting illegal activities. With the aim of detecting illegal activities. However, they have to perform. However, they have to perform However, they have to perform substantive procedures. However, they have to perform substantive procedures. Substantive procedures which can enable them. Which can enable them. Which can enable them. Which can enable them. Determine whether or not. Determine whether or not. Determine whether or not. Determine whether or not the company is doing illegal activities. The company is doing illegal activities. The company is doing illegal activities. Illegal activities. Once auditors notice that there is an activity resembling money laundering, they should take necessary action. They should take necessary action. They should take necessary action. They should take necessary action as informing the relevant authority. 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 Next point, auditors should be concerned. Auditors should be concerned. Auditors should be concerned. Auditors should be concerned with such activities. Because those activities can affect the company's financial statements. The company's financial statements. The company's financial statements. The company's financial statements. And next point, the auditor must first determine. The auditor must first determine. The auditor must first determine. The auditor must first determine if the suspected activities, are likely to have material effects, on the financial statements, e.g. in terms of penalties, fines, legal cost, etc. Next point, auditors should perform procedures. Auditors should perform procedures aimed at determining whether money laundering has in fact taken place. These procedures can consist of the following. These procedures can consist of the following. These procedures can consist of the following. Roman 1, obtain a more detailed understanding. Obtain a more detailed understanding of questionable transactions. Obtain a more detailed understanding of questionable transactions. Obtain a more detailed understanding of questionable transactions. Then number 2, reviewing the business reasons, reviewing the business reasons, reviewing the business reasons behind the transactions, reviewing the business reasons behind the transactions, reviewing the business reasons behind the transactions. And next point, reviewing the parties involved in the transactions, reviewing the parties involved in the transactions, reviewing the parties involved in the transactions. Number 4, determining the financial effect of the transaction. Determining the financial effects of the transaction. Determining the financial effects of the transaction. Then number 5, ascertaining the effects of the transactions. Ascertaining the effects of the transactions. Ascertaining the effects of the transactions. Ascertain the effects of the transactions on the truth and fairness. On the truth and fairness. On the truth and fairness of the financial statements. On the truth and fairness of the financial statements. On the truth and fairness of the financial statements. Paragraph. When obtaining understanding of suspected activities, when obtaining understanding of suspected activities, when obtaining understanding of suspected activities, the auditor should liaise with the company management. The auditor should liaise with the company management. The auditor should liaise with the company management. At a level above those involved. At a level above those involved. At a level above those involved. So when it comes to reporting on frauds, auditor should always report to the immediate supervisor or the immediate superior in that particular case. Like come on a junior, auditor needs to report to the immediate level of the management, but a supervisor. And come on, it is the executive, the management or the ones who are involved, the auditor needs to report to the directors. So also the money laundering being a fraud, the auditor should consider which the appropriate level that they need to report that particular matter. The next is that if auditors believe that money laundering, if auditors believe that money laundering has taken place, and they are dissatisfied with the management explanations, and they are dissatisfied with the management explanations, and they are dissatisfied with the management explanations, they should report the matter to the board. 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 Next point, if auditors believe, if auditors believe, if auditors believe, if auditors believe, if auditors believe that consequences of money laundering, that consequences of money laundering, that consequences of money laundering has been properly accounted for, has been properly accounted for, has been properly accounted for, or disclosed, or disclosed, or disclosed, in the financial statements, in the financial statements, in the financial statements, then they should express, then they should express, then they should express a qualified or adverse opinion. A qualified or adverse opinion. A qualified or adverse opinion. A qualified or adverse opinion, depending on the circumstances. Depending on the circumstances. Depending on the circumstances. And if the client refuses to accept, and if the client refuses to accept, and if the client refuses to accept, the auditor's opinion, the auditor's opinion in the report, the auditor's opinion in the report, the auditor's opinion in the report, then the auditor should resign. Then the auditor should resign. Then the auditor should resign. So far, there are those opinions that we discussed in our topic 1, on just the past week of our learning, our opinion that auditors can express in the report. Auditors can give a qualified opinion, which happens to be the good opinion, a favorable opinion. Auditors can also express a qualified opinion in the report. There are two major reasons why auditors may give such kind of a qualification of the report. One is due to what we call limitation of the scope. The limitation of the scope. The limitation of the scope. Then the second one is due to what we call disagreement. The disagreement arising. The disagreements arising. So there are two forms of opinion that can be expressed: qualified, that's what we call disclaimer opinion. The qualified and disclaimer opinion. This side also what they can express what we call a qualified opinion, and that one adverse opinion, So a limitation of the scope do arises whereby auditor was unable to obtain sufficient appropriate evidence. For that case, he is unable to conclude. So this was about evidence. That evidence was not enough to enable auditors to conclude about the financial statement. So they give a qualified already disclaimer. So what will make this one different is that he qualified the matter happens to be material, but not perversive. The matter happens to be material, but not perversive. He disclaimer under limitation, the matter is material and perversive. That when you use the term perversive means from that matter relating to the material misstatements is everywhere. All sales of the accounts are affected by that particular matter. So here about only a section of it is about profit and loss account peke yake, while the rest of the accounts is okay. While the disclaimer that matter can affect the whole section of the accounts. On this side, kunaweza kuwa na disagreement between the auditor and the client in terms of maybe the application of accounting standards. There was a departure on well-known accounting standards with the client management did it different. So auditor can give a qualified report or advise opinion. Again, this is when the material is not pervasive. Here, material and pervasive. That means it affects the whole set of accounts. Here, or the section, while the rest is okay. So also the money laundering there, auditors can give a qualified report or they can give advance opinion, depending on how that matter affects the sets of accounts. Is it material and pervasive or material and not pervasive? Now, an auditor also has an option to resign, but before they resign, they must seek legal and professional advice before they resign from the client entity. Let's go to the indicators of money laundering. 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 So that could be some of the signs that there is a possibility of the client by engaging in these illegal activities. One is unusual income. Unusual income. Unusual income. Unusual income. Unusual income. Unusual income. Yes, that is even if you check their budgets, they are budgeted to be able to attain a certain level of a revenue, but we can evaluate what they're receiving actually doesn't correspond. There is a suspicious activity that needs to be investigated. Because when they are making these projections happen, revenue in that particular year, frequently 12 million. But the actual one, you can turn out to be what? Maybe less than 300 million. There's something which not really done. Some unusual events happening that's what to be investigated if there could be possibility of the client engaging in money laundering activities. Number two, unusual rise in the net worth. 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 That can also be area of suspicion. Number three, unusual money inflows and outflows. 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 Next, unusual origin of funds. Unusual origin of funds. Unusual origin of funds. Next, unusual services provided by professional service providers. Unusual services provided by professional services providers. Unusual services provided by professional services providers. Next, unusual possession of assets. Unusual possession of assets. Unusual possession of assets. I.e., a person with low income, 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 owning very expensive assets, owning very expensive assets, owning very expensive assets, owning very expensive assets. So we can just this easy and think about money laundering methods, stroke strategies. 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 Money laundering methods, stroke strategies.
Question, Mwalimu. I'm just wondering, is there a way to distinguish this from fraud?
To distinguish,
Money laundering from fraud.
yes, money laundering is just a fraud in its own. It's a fraud. So we can't remove it from the word fraud. It is a fraud. It's a big fraud.
Okay.
Fraud is a illegality. And money laundering is also illegality. So it's just a type of a fraud also.
Okay.
So money laundering methods or strategies. So one is structuring deposits, structuring deposits, stroke, smurfing. Structuring deposit, stroke, smurfing. Structuring deposit, stroke, smurfing. So you don't want to raise any suspicion. So you break down that money into smaller units. That process is the structuring deposit or the smurfing. So they don't raise any suspicion when it comes to the deposits which you are making. Number two is a shell companies. Shell companies. These are the companies that we normally refer to them as the briefcase companies. They don't have a physical office anywhere, but they do operate, they transact, they are suppliers, and they get money from their bank accounts. So such kind of companies, there could be ways of dealing with the money laundering activities. So the sole purposes of those entities is just to support the money laundering activities. Number three, offshore banks. Offshore banks. Offshore banks. Offshore banks. Offshore banks. Offshore banks. Just this where they don't have banks locally upper. The bank accounts are overseas. They're outside Kenya. Reasons why they're doing so, because they want to confuse people in terms of their transfer. Now, wanaangalia zile countries go very fair. Hakuna lot of maybe disclosure. There is no taxes, such kind of countries like Panama, Hong Kong, Singapore, etc. Those are some of the tax havens where they can be able to keep their money there, invest in those particular countries, and doesn't raise any question by the World Bank. Okay, next number four is alternative or underground banking. Alternative or underground banking. Alternative or underground banking. Nation. You work in accounts department.
Yes.
Yes. What's the regulations? Any deposit or withdrawal above 1 million shillings in Kenya?
Okay. It must be an RTGS. Then the county was the same.
Yes. I'm not scare you. There's a lot of documentation still.
Yeah.
A lot of documentation involves and explanations for that. Sasa kuna certain countries where certain deposits can be made without proper documentation. Even there's no receipt being issued. You just place your money in the bank, then you disappear. So they can also make arrangements and put their money in such kind of countries where there's no much documentation or formal systems of the banking deposits. So those are the strategies that they can also use as part of the schemes of the money laundering. So that's all that you need to know on money laundering. If it is, I don't know whether I can get a question answered easily on money laundering. Look at it, how the examiner tests questions for the money laundering area. But we can just finish up. You can check those questions later. Which is a money laundering in Sophia. Yes, we have one. Is sitting is check September 2015. September 2015. September 2015. September 2015. September 2015. Is a question. Question 3B. Question 3B. September 2015. Question 3B. So, question 3B. September 2015. Question 3B. It's on page, mine is on page 63. 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 September 2015, question 3B, page 63. Page 63. Mine doesn't have. Question 3B. Question 3B. Question 3B. Samson. So my question.
There are specific obligation imposed on accountants and auditors in relation you have been asked to provide compensation to the new auditors explain the term money laundering, illustrate the explanation examples of money laundering offenses, including those which will be committed by an accountant. From explain the policies and procedures that are found that public accountants should establish in order to meet these responsibilities.
Okay, so you are required to explain the term money laundering. That one we can't explain what's money laundering. Still, allow the part, illustrate your explanation with examples of money laundering offenses, including those which could be committed by an accountant. So hapo napeana examples. Examples napeana hapo mingi, kuna illicit firearms trafficking, kuna smuggling, kuna drug trafficking, corrupt politicians, the shell companies, the briefcase companies, the offshore banks, etc. Is of smuggling, drug trafficking, also embezzlement of funds. Can also be due to money laundering, embezzlement of funds, embezzlement of funds. Then part 2 of that question, part 2 of that questions, explain the policies and procedures that a firm of certified public accountants should establish in order to meet its responsibility in relation to money laundering. So what can they do to meet their obligation with respect to these activities of money laundering? So what will the firm be able to do? So I can give you the answers for that, but put them down as policies and procedures for a CPA firm. Policies and procedures for a CPA firm. Policies and procedures for a CPA. Yeah, you're right. Policies and procedures for a CPA firm. Policies and procedures for a CPA firm for money laundering protection. For money laundering protection. For money laundering protection. For money laundering protection. So 1, appointment of a compliance officer. Appointment of a compliance officer. Compliance officer. Appointment of a compliance officer. Sasa huyo officer, the person will be responsible to receive his reports, the cases of money laundering, and be able to conduct the investigation of a such kind of matters. His work is basically receiving the reports and authorizing investigation to be done over the suspected money laundering activities. Number 2, conducting employee training and awareness. Conducting employees training and awareness. Conducting employees training and awareness. Conducting employees training and awareness on the relevant legislation, on the relevant legislation, on the relevant legislation regarding money laundering, regarding money laundering, regarding money laundering, regarding money laundering. Regarding money laundering. So it's important to keep them informed, or we are aware of the importance of taking a protection when it comes to dealing with the money laundering. Now, you appear the consequences of non-compliance with any enforcement policy put in place. Number 3, customer identification procedure. Customer identification procedures. Customer identification procedures, customers identification procedures, or customer due diligence, or customer due diligence, or customer due diligence. It's very important we put measures in place to know who are the customer and what's their source of income, where they're getting their money from, that they're spending in your base. It's very important. You must be able to know your customers well. So put measures in place to identify the customers. Next is refusing to have relation with the shell bank or shell companies. Refusing to have relations. Refusing to have relations with the shell banks. Refusing to have relations with the shell banks refusing to have relations with the shell banks or shell companies, or shell companies, or shell companies. Yes, we are trying to avoid to procure services or goods for those services that do not have a permanent residency. There is no location where they are based, but they are doing business. You need to know where you actually based, where is your location. Because it could be dealing with the person who is the money laundering business. And next, enhancing record keeping systems. Enhancing record keeping system. Enhancing record keeping system. Whereby the clients must maintain proper records, whereby the clients must maintain proper records, whereby the clients must maintain proper records. The other one, reporting suspicious transactions. Reporting suspicious transactions to the relevant authorities. Reporting suspicious transactions to the relevant authorities. Reporting suspicious transactions to the relevant authorities. Next, internal controls. Internal controls, i.e. the CPF firm, i.e. the CPF firm, i.e. the CPF firm should put in place effective systems of controls. Effective systems of controls. Effective systems of controls to control money laundering activities. 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 So those are the procedures which can be put in place by a CPF firm when it comes to dealing with the money laundering issues. So maybe just one more question is on December 2021. 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 Question number 4B. December 2021. Question number 4B. December 2021. Question number 4B. Question number 4B. Question number 4B. Question number 4B. December 2021. Question number 4B. So the question is like this, your question 4B. Money laundering continues to gain currency in spite of the efforts by countries and international financial institutions to combat it. So required, summarize some of the measures undertaken by various countries and international financial institutions to control and prevent money laundering. To control and prevent money laundering. Yes, some of the points we mentioned up earlier can also be used, like training of the staff, putting effective systems of controls, proper recorder keeping, proper recorder keeping. Na pia ikikuja kwa vitu kama the banks, there should be proper documentation of the bank deposits and proper declaration of the income. Like hapa Kenya says, ukienda na 1 million you want to bank from the bank to a bank, they ask you the source of that money. Where is it coming from? As a way of trying to combat this money laundering behavior, you should be able to disclose the income where such money is coming from. So that's a question that hatuwezi kuwa na shida kuanza in terms of those measures to be taken by countries in combating money laundering. Sasa I want us to go to the other part, a subtopic, which is professional skepticism. As another principal matter, professional skepticism. Professional skepticism. Professional skepticism. So you tunaweza kufanya kesho when we meet tomorrow from 8:30. We shall look at that particular concept, professional skepticism. So we can call it a day, then tupatane tomorrow.